Hey guys, so we just had earnings come out from Realty Income stock. This is the monthly paying dividend stock. They actually have that trademarked, but I might be a little biased on this company. We do own 30 shares of Realty Income, but point being, they just reported earnings and there was some good news and there was some bad news about the earnings, which we'll dig into. And we actually have a pending dividend coming in from them of $7.91. And you get that every single month, which is kind of cool. Realty Income, they're in the S&P 500. They're credit rated from S&P Global and Moody's. And here's what I really wanted to show you from their investor presentation. So we want to look at what industries make up the largest percentage of their earnings, and check this out. Grocery stores are actually the largest exposure. It makes up 10.4% of their annual base rent. And this is such a great industry to be in, the grocery store industry, because look at the stock price of Walmart and Kroger, Costco. All these stocks are at all-time highs right now. So the grocery store industry is doing really good. They also have Albertsons, which I think is getting acquired by Kroger. I don't know. And then Amazon, Target, some other cool things. But Realty Income's top two UK grocery clients control 43% of the grocery market share. And here in the United States, Walmart and Kroger control 35% of the market share. So yeah, that's the grocery store industry. Here's the convenience store industry. So this is the gas station. And here's what's cool. They actually tell you about the margins of them. So like the gas station people get a 9% margin on gasoline. But if you go inside the store, go buy like a pack of gum or I don't know, whatever, a snack, they get a 30% plus margin on the in-store sales, which is pretty cool. And these convenience stores make up 9.4% of their annual base rent, which is good. Everyone's got to go to a gas station. I don't know, they kind of talk about EVs as well. So yeah, that's pretty cool. Or look at that. The average age of a car on the road is 11.8 years. I did not know that. And then next up, we have the dollar store industry. So I'm glad that they're actually lowering their exposure to the dollar store industry. So check this out. Only 6.5% of their annual base rent comes from dollar stores. So I like that convenience stores and grocery stores are more than their dollar stores. But yeah, we can look at the stock price of Dollar General and Dollar Tree. They're not doing amazing. We can kind of see like the cyclicality of the dollar stores. The dollar stores do good in like recession times. But yeah, anyway, next industry is the home improvement, which makes up 6% of their annual base rent. And check this out. These are from companies like Home Depot and Lowe's, which, those are two very high quality tenants and they're both publicly traded companies. They're credit rated as well. So yeah, it's good to know that Home Depot and Lowe's, and then also for their UK market. So like 12% of their money comes from Europe and looks like this. So B&Q and Screwfix, which is their tenants, they control just under 40% of the home improvement market share there in the UK. So they have some very quality brands, quality names that they're partnering with. And lastly, these stores right here, I don't know if I can say this word right here, but these stores like Walgreens make up, this is going down as well. So I like that they're lowering their exposure to this as well. So Walgreens, this industry isn't doing great. Same with CVS. They got CVS and Walgreens in here. Not too great of an industry. It's almost like Amazon is coming for Walgreens. Anything you can get on Walgreens, you can pretty much get on Amazon, I guess, except for like medications. But yeah. 85% of the U.S. population lives within 3 miles of a Walgreens or CVS. Only 3 miles. I know they have a ton of stores, but here's the not so good part about the company. So if you look at the net income per share, this is the prior guidance, and here's the new guidance. So if you look at it, it went from $1.30 to $1.20. But again, you don't really look at the net income for REITs. You want to go to the FFO per share, and this is also the kind of not so good news. It went from 428 to 421. It got lowered. But if you look at the AFFO per share, which is the adjusted number, they actually slightly rose it. So the top line, the 421 stayed the same, but it went from 415 to 417. So that's like I said, there's good news and there's bad news. But there's also some other good stuff like the occupancy over 98%. They're keeping that. Disposition volume, they upped that. It looks like they're going to divest another $100 million. Recently, they've been selling out of Walgreens and dollar stores. They've been selling those, which is a good actually. I'm not going to get mad at that. But yeah, that's pretty much what I wanted to show you from this quarter. I mean, this is such a high quality company. I mean, if we just scroll up to the top here, I mean, triple A rated from Moody's and S&P Global. They're the 7th largest global REIT in 8 countries. They have a good exposure, healthy exposure to Europe, like 12% of their total revenue. 55 years of operating history, 15,000 total properties, and 32% of those are from investment grade clients. So they have a rating from S&P Global or Moody's. 652 monthly dividends declared and 108 consecutive quarterly increases. So yeah, with 4.3% CAGR since 1994, S&P 500 Dividend Aristocrats member. So such a great, company in my opinion. And here we can kind of see, the highlights of the quarter. You can pause and read this if you want. There's nothing, too crazy here. Oh yeah, and here's kind of just another very important slide. We already looked at their top industries. As we know, grocery store was their largest one, then convenience stores. That's what we were just looking at. We can kind of see all their top clients right here. And the ones that are in orange right here are credit rated clients. So they have a credit rated from S&P Global or Moody's, which is pretty cool. They got 7-Eleven on here. They got Wynn Resorts. They're very diversified. They're in so many different industries. And check this out. Look at this. 12% of their revenue comes from the UK. So yeah, like I said, they are geographically diverse. And then 10% comes from Texas. So Texas and UK are like pretty similar in terms of size for this company. So Texas, they have a lot of exposure there. But anyway, yeah, that's what I really like about this one. They have accretive re-leasing activities. So their customers keep on signing new leases, so they have 104%. It's over 100%. That's crazy. So yeah. And if we go back here to their guidance, I want to show you what Realty Income's valuation is right now. So right now, Realty Income's stock price is $59.29. And if we divide that by their earnings, so look at this, we'll go with their lower end guidance here of $4.16. Let's say they don't get that good of earnings. So that means their valuation is 14.25 times AFFO, which is, pretty cheap actually, 14.25 times AFFO. But let's actually go with the bull case here. So $4.21. So let's say they make $4.21. Let's times this by, I don't know, 16. That might be a stretch. So if they trade at 16 times AFFO, that's a $67 stock price, which isn't that nuts because literally just a month ago on October 18th, there were $64.70. And if you're a shareholder, at the end of the day, I wouldn't be that disappointed. Look at that. The AFFO guidance was short kinda by a couple percent. So not even the AFFO guidance. They actually rose slightly their AFFO guidance, but the normalized FFO per share was actually slightly lowered. It went from 428 to 421. So at the end of the day, as a Realty Income shareholder, I wouldn't be freaking out over this. So that's probably why the stock really isn't moving after hours. The earnings were pretty good actually. So yeah, that's kind of my honest thoughts on Realty Income. Again, I might be a little biased on them because I got 30 shares of them, but they're a high quality company. I actually own another REIT. If I actually go here, so check out the Robinhood Legends platform. Maybe we can do this on here. Oh wow, look at this. Has anyone ever used this? This actually just came out, which is pretty cool. But if we actually head over here to my Roth IRA, I actually kind of own one of their competitors, ticker symbol BRX. This is a pure grocery store REIT. So if you like the grocery store industry, which was the largest portion of Realty Income, BRX is a pure grocery store REIT. See, I'm still trying to learn how to use this thing. Here's the actual price down here. How do I switch to the daily? I don't really know. But anyway, it's down here. I wasn't even able to see this. But anyway, that was pretty much the video, guys. Don't forget to drop a like if you did enjoy. And if you have any comments for me, let me know in the comments and I'll respond to all of them. But hope you guys have a great rest of your day. I'll see you on the next video.